Are you diversifying your investments across traditional methods like stocks, bonds, life insurance, but you're still far away from reaching financial freedom? So, traditional diversification is smart for managing risk, but does it really help you get to where you need to go for retirement or to your financial freedom goals faster? In this video, I'm going to make an argument that the answer is likely no. If you want to generate cash flow, build wealth faster, and reach your financial goals sooner, you're likely going to have to consider investing in alternative assets like real estate. But that doesn't mean you have to be the one that's changing out light bulbs and fixing toilets and doing all the maintenance stuff either. In this video, I'm going to show you how to passively invest in multifamily real estate without having to do all the work. My name is Garrett Lynch, and I help people become financially free with real estate. So the problem is you have diversification. Most people. So when you've been taught a certain way, it's, hey, let's invest. You have an advisor come over to your house. Maybe there's a money manager or something like that, or maybe it's a bank. You say, hey, just put your funds in with us, and we're going to grow it steadily over an extended period of time. That's typical. And when you're doing that with the stock market, you have liquidity in there, and it's possible that it doesn't go up fast enough. It's going to be slow, first of all, but you can also access it and sell it on emotion. That happens. If you're doing bonds, it's a little bit different, but you're going to have similar issues there as well. It's just too slow. And then life insurance is really slow. You're going to be investing if you have like whole life insurance policy or something like that. If you're looking to retire, there's something called the 4% rule. And it's essentially that it says that you take 4% of your retirement portfolio each year, beginning in the first year. Then you have to adjust it for inflation every year after that in order to be able to retire. So if you have $1 million the first year, you're able to take 40,000 out and still be okay. And if that's not enough to live on, then you're not getting where you need to go. And so it's not super attractive. And listen, these are lower risk options, but they could be risky in a sense that you clear out too much. Maybe you go 8% or 10% and you burn through your retirement funds faster. So many people do diversify across stocks and bonds, but they don't put enough capital into alternatives. And the result of that is you're going to pay too much in taxes. You're not receiving any passive income, and it's just super slow growth. And you can exit anytime on emotion most of the time. So traditional assets, not the best option, but most people do it just because of what you know and what you've been taught. So I actually used to have a portfolio of stock, and I had it a while ago, and I was just building it. And then one day the market fell out, and I panic sold everything, and I was extremely upset when things started to come back. It was many years ago, but that's something that can happen. It's a very real thing. Also, early on when I was like in college, someone said, hey, invest in life insurance. That's a thing. But it took like 12 years to even get back to zero because you're investing a whole time and the cash value is worth less. So to even get past that, where it starts to compound and all that, it takes years and years. And that's not really the best investment. That now there's other versions of that where you can leverage it, but there's risk in that as well. So there is an asset class that inside of alternatives. And by the way, many people that are wealthy, you'll see a majority of their portfolio is likely in alternatives. That's something that you see. There's even there was a study done that they had billionaires have a majority of their investments in different forms of alternative investments. And alternatives are just you have more control. Typically, there's somebody that's controlling the business or operation, and there's a way to add value into that business. It's a different type than traditional, and it's got a different risk levels to it. I would say that there's a higher risk level to certain alternatives than others. You could even consider crypto an alternative asset, but that's got like the highest risk profile potentially. Depends on how you're looking at it. Real estate is typically somewhere in the middle to the low end, depending on how the deal's structured and all those things. But multifamily real estate is what I really like because there's always going to be a demand. There's just still a housing shortage. Yes, there's been an oversupply issue in recent years where you've had overbuilding because of COVID, but that's about to go away very quickly. and there's always a demand to rent. There's still this huge discrepancy between what house prices are and what people can afford for rent. So there's always going to be a demand for renters, and you have that product. And so now, and then there's always going to be a discrepancy between operators that don't know how to run these things and not, and also dated buildings. So think about this: you go and renovate an apartment complex 10 years ago. Well, 10 years later, that's outdated, the renovations. So you have to renovate again. So there's always, you have this effect. There's always a gap. And that means there's always value. So you can pick up these alternative assets, this multifamily assets. They have a high demand. You have to manage them. You can renovate them and make them worth more money. And then that will help you get to your investment goals faster than a traditional setup. Not to mention, there's great tax benefits like depreciation. There's cash flow. So you can get minimum, typically 5% cash on cash return, all the way up from there to whatever depending on the deal and the risk profile. And then a typical turnaround, I mean, we try to 2x your investment in 5 years. So in a 5-year window, if we can get you put in, let's say $1 million, we can try to turn it into 2 million in about 5 years, which essentially doubles your investment much faster than traditional methods with about a moderate risk profile, which is really nice. So diversify, that's something that you should do. But if you're not looking at alternative assets, you really need to. And if you're looking at multifamily specifically, you want to make sure that the first thing you can do is shop your operator. So somebody that is going to do all the work. Typically it's set up. Somebody does all the work, finds the deal, puts the financing together, puts their own money in, makes everything happen. And then you come in and you invest in the other side of that, which is so you have your general partner running the show. They typically take a percentage, typically 20% to 30% of the asset they take for doing all the work. And then they sell off 70 to 80% of the asset to you. But you get to sit on the sidelines. You don't have to do anything. You get reports and you get checks. And that's how it works, right? So they're able to go buy a bigger, like we'll be able to go buy a big asset with a bunch of people, pay them their dividends, pay them their distributions, give them the tax benefits if they own real estate themselves, but they don't have to do any of the work. And that's a really good option. So if you're interested in that, the first thing you need to do is find the right operators, the guys that are doing this full time, not any passive part-time guys. Someone that's doing it full time, has been doing it for a while, knows their market, knows their business plan, knows what they're talking about. That's who you want to try to invest with if they have availability. A lot of times, guys that do this, they fill up super fast, and then you have to wait for the next investment. So but the first step is really to vet your operator and see what they're about. And that's true in any alternative asset business. You have to really do your due diligence on them. If you're comfortable with that, then test them out, invest 100K or invest whatever amount you feel comfortable with that's in their minimum, see how they do. And then you can take it further from there potentially. So this asset class multifamily is only going to get strong already. It's going to get better. And it's something that you should definitely consider adding to your portfolio in some capacity, especially if you've got a lot in just the traditional methods, because it'll just help you get to your goals faster as long as things work out with the investment, of course. So with that, check us out, nighthawkequity.com. Click the join button. You can set up a call with us if you want to chat more about what we do and multifamily investing, or just get some more information. Set up a call. We'll be happy to talk to you, see how we can help you get your financial freedom goals a little bit faster. Thanks so much. We'll catch you next time.